What if I tell you that a company worth nearly $5 trillion just did something no mega-cap stock has done since the final days of the 1990s dot-com boom, and Wall Street is still scrambling to catch up? Today on Smart Stock Sam, we're going deep on NVIDIA. The stock just crossed $200 a share, and the single most important question on every investor's mind right now is this the top, or just the beginning of the next leg up? Stick with me, because by the end of this video, you'll have the full institutional blueprint, the order backlogs, the options plays, the technical signals, and even the one hidden insider metric that quietly changes the entire risk profile. Let's get into it. To understand the world we're living in right now, you have to forget the NVIDIA of 3 years ago. That company was a story stock, a high volatility, high speculation bet on what artificial intelligence could become. What we're looking at today is something fundamentally different. We have entered what institutional analysts are calling the execution validation phase. This isn't about experimental chip deployments or pilot programs anymore. We are talking about industrial scale demand, confirmed production pipelines, and revenue that is no longer hypothetical. It's already showing up on the income statement. That shift in narrative is precisely why the market cap has climbed to approximately $4.9 trillion. The market isn't guessing whether the money will arrive. It's simply calculating how fast NVIDIA can ship it. And the shipping has been fast. On April 17, 2026, NVIDIA closed at $201.68. That close capped off an 11-session consecutive winning streak, the longest in the company's history since the 20th century. In just those 11 trading days, the stock appreciated by 20.4%. Let that sink in. A nearly $5 trillion company adding a fifth of its entire value in under 2.5 weeks. This is not retail FOMO driving that kind of move. This is institutional accumulation, large funds, algorithmic desks, and pension money quietly building positions while the headline news keeps asking whether the AI trade is over. So, what exactly are those institutions buying into? The answer is a $1 trillion fundamental moat. NVIDIA currently sits on a confirmed order backlog of $1 trillion that extends through 2027. The current Blackwell architecture is being absorbed at a pace that has the supply chain strained. Behind it sits the Vera Rubin architecture, and already on the horizon is the Feynman platform slated for 2028. Now here's where it gets interesting. Despite all the geopolitical headlines about trade restrictions and supply disruptions, NVIDIA's supply chain resilience is holding. Partners like SK Hynix and TSMC are maintaining elevated reserve capacity. The demand isn't seasonal, it isn't experimental, and it isn't slowing down. It is structural and industrial. With a backlog that size, it's no surprise Wall Street has been in a state of aggressive bullish catch-up. The consensus rating has been upgraded to a strong buy across the board, with an average price target of $275.25 against today's price of just over $200. And if you look at the high-end cluster, firms like Bernstein, Robert W. Baird, and William Blair are all pointing toward $300. Rosenblatt is pushing the envelope even further with a $325 target. When the most conservative institutions on Wall Street are still projecting a significant premium to the current share price, it tells you something important about where the smart money is positioned. But hardware is only one dimension of the story. NVIDIA isn't standing still. They are aggressively expanding their total addressable market into territory most retail investors haven't even heard of yet. Consider this. NVIDIA just launched NVIDIA Ising, the world's first open-source quantum AI model family. That is a direct move into quantum software calibration, a field with multi-decade growth potential that could ultimately be larger than the AI market itself. On top of that, they have deepened their integration with Cadence for agentic AI and industrial digital twins, essentially positioning themselves to digitize the entire global manufacturing sector. One more thing worth addressing, those rumors about NVIDIA pursuing an acquisition of Dell or HP? management has categorically denied them, and that denial actually strengthens the bull case because it signals NVIDIA remains laser-focused on its core platform rather than diluting into complex hardware conglomerate territory. Now here's what separates the professionals from everyone else in this conversation. Most people hear 4.9 trillion and think the stock is expensive. But look at the PEG ratio. NVIDIA is currently sitting at 0.66. In financial analysis, a PEG ratio below 1.0 generally signals that a company is undervalued relative to its earnings growth rate, and the market average hovers around 1.0 or higher. Then look at net margins. NVIDIA is printing a 55.6% profit margin. AMD, their closest competitor, sitting around 20%. With an 86% market share in the data center GPU space, NVIDIA's operating leverage isn't just impressive. It is the single most efficient money-making engine in the entire history of the technology sector. The fundamentals are undeniable, but no analysis is complete without the technical picture. And the charts are screaming disciplined institutional momentum right now. The 14-day RSI is sitting at 69.75. Traditional analysis flags 70 as overbought, but in a high-conviction institutional bull trend, the zone just below 70 is actually the sweet spot. It shows sustained buying pressure without exhaustion. The MACD is at 2.47, confirming the upward trend is still accelerating, not topping out. And critically, the stock is trading well above both the 50-day simple moving average at $183 and the 200-day moving average at $185. But here's the signal that really lit up the algorithmic desks. The golden cross just executed. That's when the 50-day moving average decisively crosses above the 200-day moving average, and for quant funds and trend-following algorithms, this is a primary entry trigger. It's the green light that officially invites a fresh wave of institutional capital into the position. Historically, the Golden Cross has often been the precursor to a powerful second leg in a major rally, and based on the current price action, that second leg appears to be unfolding right now. Now, here is the part of this video where I have to be fully honest with you, because this is where the risk profile gets more nuanced. On one hand, short interest is an almost invisibly low 1.21%. Nobody with serious money wants to bet against this stock. But on the other hand, NVIDIA insiders have sold over 1.1 million shares in the last 90 days, worth approximately $207 million. Executives taking profits isn't a death sentence for a bull thesis, but it is a signal that tells you to be disciplined about your entry. You do not want to be the buyer at the top while the executives are quietly rotating out. So where is the institutional money actually positioned? Follow the options flow. The put-to-call ratio sits at a low 0.37, meaning for roughly every one bearish bet on this stock, nearly 3 bullish bets have been placed. But the real tell is what some analysts are calling the blueprint trade. A $35 million institutional bull call spread was recently placed with a May 29th expiration. The structure, long on the $200 calls, short on the $225 calls. This is a calculated, high-conviction position that locks in an expected price range between $200 and $225 by end of May. With implied volatility under 20%, these options are relatively inexpensive, offering significant leverage heading directly into the May 20th earnings report. Smart money is not buying randomly. It is buying with precision. Now, could something derail all of this? Absolutely. And you should know what those risks are. The Department of Justice is currently running antitrust investigations into NVIDIA's market practices, and there is regulatory scrutiny surrounding their acquisition of Slurm and Sched-MD. On the competitive side, AMD has been deepening its partnership with OpenAI, while Amazon and Google are quietly building out their own internal silicon, Trainium and TPU, respectively. Could any of these technologies realistically challenge NVIDIA's 86% market share in the next 12 months? The probability is negligible, but they are long-term structural risks, and any serious investor keeps them on the radar at all times. So, where do the actual numbers go from here? The accumulation zone for new entries is between $190 and $198. If the market pulls back to that range, you treat it as an opportunity, not a warning sign. Primary support is anchored at $195, former resistance that has now flipped into a structural floor. Secondary support, if things get volatile, sits at $183. On the upside, near-term resistance sits at $207. Break above that, and you're looking at the October intraday high of $212 as the next gate before the stock enters blue sky price discovery. Short-term target, driven by that $35 million option spread and May earnings momentum, is $220. 12-month institutional consensus trajectory puts this between $275 and $300, a mathematical output of that sub-1 PEG ratio, asserting itself as the Vera Rubin architecture begins flowing into revenue. Before my final take, I need to be clear, nothing in this video is financial advice. Smart stock. SAM content is for educational and informational purposes only. Every investor has a unique financial situation, risk tolerance, and time horizon. Always do your own research and consult a qualified financial advisor before making any investment decisions. Past performance is not indicative of future results. Markets carry risk, and you could lose money. So here is the bottom line. NVIDIA is the primary holding for AI infrastructure exposure. Full stop. You have 55% net margins that no competitor is close to matching. You have a golden cross that just triggered fresh institutional inflows. You have a $1 trillion order backlog stretching into 2027. The structural moat is real. The execution is validated, and the options market has already placed its vote on where this goes by end of May. My discipline framework. Don't chase the vertical spikes. Use the $195 level as your critical foundational pivot. As long as price holds above that, the next bullish leg isn't just possible. Based on every metric we've covered today, it's probable. Now I want to hear from you. Drop your answer in the comments. If NVIDIA does hit $300 within the next 12 months, what do you think finally triggers the next major correction? Regulatory action, a competitor breakthrough, or simply the weight of valuation? That's the real question every serious investor needs to think about right now. If this breakdown gave you genuine value, hit the like button and subscribe to Smart Stock Sam so you never miss an institutional level analysis like this. And if you really want to support the channel and help us keep producing this kind of deep research, you can use YouTube's Super Thanks feature right below this video. Every contribution directly funds the next breakdown. Thank you for watching, stay disciplined, and I'll see you in the next one.